John Carney, Breitbart economics and finance editor and co-author of the unbelievable Breitbart Business Digest. John, just check out this chart. This is for off-the-chart chart, okay? What we have here is the two lines. One's a 10-year bond yield, and the other's CRB commodity index. Notice, they work together. When interest rates are going up, as they were in the spring and summer, the commodities were going up.
Sure.
Booming. It was booming. Now, interest rates start coming down in, early, mid-September, and you can see commodities are down too. About 15%. All right, the 10 year is, hovering 4? It's below 4%.
Below 4.
Yeah.
It's almost 3.9.
I'm just saying, look, there's nothing wrong with this. I'm just saying that I think we're headed for a bout of deflation, and there's nothing wrong with a bout of deflation either.
Especially after the inflation we just had.
That is correct.
People will take deflation any day of the week because we've had so much inflation. Taking back some of those price hikes would be a big relief to people.
But it would be a little harder landing in the short run. I mean, the stock market's not signaling a big crash right now. But I'm just so saying, be a little sober about the outlook in the next 2, 3, 4 quarters, because I think I don't care what the Fed says. I'm much more interested in trying to figure out what Mr. Market is telling me.
Right. Well, the market, though, is sending a pretty insane message. Right now, it's pricing in 7 rate cuts next year.
Well,
that's really, really exuberant. If the Fed cuts 7 times next year in an election year, they're going to be instantly accused of trying to fix the election. I think they're going to stay away from that. I think the market has, as you said it, gone over-exuberant here. They've gone too far. I don't think what's weird is if the market believed there was going to be a deep recession, 7 cuts easy next year. But instead, we're getting this weird thing where where people are predicting, no, the economy is going to be fine. We'll grow 1.5%, maybe 2% next year, and the Fed will cut at every meeting other than January. Right now, they're pricing it in 60 to 70% chance of a cut in March. That's 2 meetings away, 3 months from now. They're saying we're going to have a cut in March. I don't get it.
I just often say, when I was in that game on Wall Street and loved being in that game, and I wish I could cover it more, but such is life. I'm just saying it's more useful to follow the market signals, what we used to call Wayne Angel market price signals, Manley Johnson, Alan Greenspan, who was a gold guy for all but the end of his career, than it is to parse through the Fed. The Fed stuff can be sometimes a fool's errand, and then the futures market does this. I'm just saying, when I see a chart like that chart, the relationship between interest rates and commodities has not broken down.
The one thing that gives me hesitancy about the idea that we might have even a slight downturn next year is how strong retail sales are. The consumers spent more money in November than anybody
to massive
thought.
revision. Subject to huge revision.
It always is.
The prior 2 months are revised downwards. Nobody knows what those numbers mean. Look, I'm a numbers guy. I'm okay with it. I'm just saying that a lot of middle-class people, a lot of young people, would be happy to get some price relief.
Absolutely.
In other words, the CPI is up about 17% the last 3 years. That's put things like cereals and meat and milk and poultry and certainly even gasoline, they're all off their highs, but they're way above where they were 3 Christmases ago. That would be welcome relief. The Fed ought to let a little deflation happen. Don't go crazy and try to ease right off the bat, throw your Phillips curves out the window. It's okay. Let's have a little deflation.
Right. The Fed has this
it.
Totally upside down right now, Larry. They have an asymmetrical approach when they should be going the other way. They should be very worried about inflation and not too worried about deflation. Instead, they're scared to death of even a slight downturn.
I know.
And they seem willing to let inflation happen. That's why we got high inflation in the first place, and I think they're making the mistake
Well, that's
again.
true. And the Bidens keep spending like drunken sailors,
Absolutely.
so they're not going to help them on that side either. And look, the Kudlow Trust continues to own the S&P index. Period. I don't mess with it. So I've had
I'm up a lot
of good
this
days.
year. I mean, it's hard to complain.
No, I almost feel wealthy again. Anyway, thank you, John Carney.